All right, good morning for this Tuesday, June 4th. We're going to look at CEF and the GLD gold trade, and there's three other markets that I want to take a look at real quick and point these potential plays out to you. So first one we're looking at here is CEF stock, the CEF. Remember, we've been long since $15.50. The market yesterday ran up to $16.30. We're looking for our first objective at $16.90. So what I've done is I've gone ahead and I've moved my stop pretty much to lock in about 19 cents only on this, okay? So again, we're long at $15.50. My sell stop is now at $16 or $15.69. The market starts breaking down through this low red in here. I'm not going to want it anymore. I'm going to want to lock in just a little bit. Call it a free trade, if you will, okay? So again, we're still looking for this market to bounce, but it's taken a little longer than I thought. So again, I'm going ahead and I'm moving that initial stop loss, right? The ISL initial stop loss, moving it up to $15.69, $15.69. Next one I want to take a look at real quick is gold, GLD, the ETF GLD. If you recall, we went long this ETF at $133.75. Hit our first profit objective here, if you recall, last week at $136.95. Nailed it. Okay. Our second profit objective on this is $138.62. I've actually gone ahead and moved my stop again. So if you recall, we moved our stop up to 100. Remember, our initial stop was below this double low, right? A close below it. Then we went ahead and we moved our stop up to $132.60. I'm going to go ahead and move this up even further, right in here, $133.69. Okay, $133.69. Here, let's see, right below this low here. 20 cents below this low. You see this? The low that was made on May 31st. Market breaks down through that low. I don't want it anymore. 133.69. So I'm risking 6 pennies on this. So this is pretty much a free trade gold as well, okay? Now, three markets that I want to take a look at. One is the Forex currency pair. Well, two of them actually. The US dollar, Japanese yen, okay? As you already know, this market's been on a tear for months. Market's been straight up, right? We've had some good trades in here, actually, to go long. But currently flat, the market. And if you see, look at this right in here. Nice setup, right? This hot pink line, as you already know, is the 50 exponential moving average. Right, so we've come down. Yesterday we came down and actually nailed the 50 exponential moving average. And you could have bought it there. You could have bought it on the dip as it actually hit that 50 exponential moving average, anticipating the bounce up with an initial catastrophe stop loss drawn below the last pivot low right here that I'll call an active low, AL. Didn't do that though, but actually scanned the market today and kind of found this. Look at this. Now, granted, the day's not over, of course, right? But I'm going to look at this as a potential inside pattern. You see how the high, so far, the high is lower than yesterday's high, and the low is higher than yesterday's low. So what we may get here is an inside pattern. And if we get an inside pattern, I would be looking to potentially take a long trade tomorrow up through the high. So I'm going to keep the USDJPY on my watch list, and we'll take a look at this tomorrow. The second one I want to take a look at this, is the US dollar Swiss franc. Okay, again, as you can see, the bars are green, right? They turn green here, denoting an uptrend, right? So you want to be buying the dips. Okay, so as you can see, the market took out this high right in here, right? We made this high right here. We've been coming down off this high, right? As you can see, we're trading between the mid to the lower band. And look at this. Look at the hot pink line. This is a 50 exponential moving average. This is a 200 exponential moving average. Yesterday, in fact, the market dipped right between the 50 exponential and the 200 exponential moving average. A real nice area of support, and that's a potential buy area, right? Again, didn't take any action yesterday, but what I'm noticing now, so far, again, the day's not over. It's setting up for a potential inside pattern again, right? You see the high of today so far is nowhere near yesterday's high, and the low is much higher than yesterday's low. So today, we may get that inside pattern. Okay, so we're going to watch this. We're going to keep this on our watch list as well. I'll be back with you tomorrow on that. And the last one I want to take you through is the TBT. TBT, I pointed this out yesterday. This is the inverse. This is a bond. This is a bond play. This is an interest rate play. I think interest rates are going higher, and so that would mean that this ETF would go higher as well. Let's back this up a little bit and show you the chart going a little further back here. Last week, last Friday, the market actually punched up and hit 69.69 and actually took out this high, right? But was not able to close above it. But we got a real nice run, and I'm just real upset that I missed this trade. But as the market tested this low last week, that was a buy all over it. Okay, now again, this is a counter trend trade. I know a lot of people are going to reach out and say, hey, the trend is down. Why wouldn't you be looking to sell it? No. I'm looking to buy it. Again, this is a counter trend trade. There's a lot of reasons why I want to be long this market. So I am currently flat this market, and I am looking to get long. Okay, I'm definitely looking to go long. So what I'm going to do, and I'm going to keep this on my watch list. I'll actually take a more aggressive play here. If the market is not able to pull back into a logical support level where I can buy this, if it's not able to do that, I am actually willing to buy this market as we start penetrating up through the 69.69 on a breakout type of trade. I'll put my toe in the water. I'll start getting in, and if we get the pullback, then I'll add to the position. So really what I'm looking at here is I'm going to measure from this low up to this high. Basically, here, let me show you what I'm doing. Basically, measuring from this low, again, from this low, measure from that low up to this high, right? You can see the 38.2, the 50, and the 60. Okay, you see the mid band here, right? The red, and this is the lower band here. I really want to see this market come down into a logical support level right in here where I'd be looking to buy it. Now, if the market's not able to do that, we continue higher. As the market penetrates up through this high, I would actually be buying some. I want to be long this market long term. So if it goes up, I'd be long a little bit. If it comes down, I would get in a little bit more in here. Okay, so that's what I'm looking for. As you can, let's see. Market has opened. As you can see, the market has bounced from this 38.2%. Now remember, we measured this yesterday. From this low up to the all-time high, measuring just this last upswing, the market so far, we've bounced nicely off of the 38.2% retracement of that swing, which is a logical support level, right? That number is about 1626 3/4 so far, 36.4. We're almost up 20 points in the S&Ps from that. So it'll be very interesting to see if we can start to rally a little in here. If not, if we start breaking down through this low, I would suspect this market would go between the 50 and 61.8% retracement, where the 50 exponential moving average is sitting in around there. So I went through a lot today. If you got any questions, let me know. Reach out. Have a great day. Hope this helps. Bye for now.